Good morning, good afternoon. Welcome back of the second day of the Inclusive Insurance Conference dedicated to the CEET region. Today, and according to our program, we'll have two very interesting and excited panel session devoted to the first panel session to designing and implementation digital insurance solution for the low income, excluded or underserved, supported by favorable regulatory framework. The second panel, it's about the understanding and meeting the needs of customers that lie in the heart of every successful effort to reach the scale of the CET insurance market. Your moderator for the first session will be Hannah Grant from Access to Insurance. So Hannah, over to you.
Thanks, Clive. Actually, Hannah is on the panel, and I'm Manoj Pandey, a colleague of Hannah's on the E2I.
Sorry.
No worries. Would be the facilitator for the session. Thank you for the introduction, and welcome again, everyone, to the third session of the conference on digitalization. New technologies are dramatically changing the landscape for insurance around the world and enabling insurers to reach new mass market segments. New data sources and analytical tools are changing risk models by enabling new ways to create, capture, and analyze valuable information that can help insurers better calculate and manage the risks associated with customers. Machine learning applied to satellite imagery is changing agricultural and disaster insurance, allowing for more sophisticated claims management, even facilitating pre-loss payments that can help minimize the cost of disasters before it is full-blown. The expansion of identity solutions and onboarding options is lowering operation costs and enhancing convenience. The use of mobile phones to deliver insurance is no longer a novelty, but there is a tremendous scope for growth. Mobile phone penetration in emerging markets is now 80%, making mobile devices excellent distribution channels. Mobile phones are convenient for enrollment, transmitting premiums, and paying claims. Mobile phones have also been helpful for customer service, policy management, consumer education, and other vital functions. So all these aspects clearly tell us that digitalization is the new force which is driving greater inclusive insurance and access to insurance across all markets. And that has its own relevance for the CET region as well. And today we have a panel which will help us better analyze use of digitalization its growth and how it can be a force that can drive inclusive insurance in the region. Introducing your panel to today, we have Alexandru Chinan, who is the General Director for National Association for Insurance and Reinsurance Companies. We have Mr. Richard Leckie, who is the Executive Vice President of the Motor Insurance Company from the United Kingdom. We have Mr. Suresh Janardhan, Commercial Director Asia from Pune. Thanks, Suresh, for stepping in last minute because our Ms. Rose Gosling, the co-CEO of Pune, was supposed to be on the panel, but she had a health emergency, and Suresh has very kindly stepped in to take her place. And we have Hannah Grant, who is the Head of Secretariat Access to Insurance Initiative. So getting this discussion started, I would first like to invite Mr. Alexandru Chinan. Before we move ahead with the session, very quickly, the housekeeping items for today. Today's session is scheduled to be lasting for 90 minutes, including the question and answer. I hope the audio gets better right now.
It's better now, Manoj.
Okay, great. Okay, so today's, just quickly going through the housekeeping items. Today's session is scheduled to last 90 minutes, including the question and answer session. Questions can be submitted via the Q&A feature of Zoom, and you can use the raise hand icon to speak and lower hand and mute afterwards once you have made your contribution. The session will be recorded. Slides and a recording of this session will be uploaded onto the conference website. Please message the MIN executive team via chat if you have any technical issues. So please do keep these housekeeping items in mind. And this now helps us to get to Alexandra now, who would give us an overview of the state of inclusive insurance and mobile-driven insurance solutions and movements in digitalization in the CET region. So Alexandra, over to you. Thank you.
Yeah, thank you so much. Hopefully you can hear me. So good morning, everyone, and thank you for the invitation to this exciting conference. It seems that no matter the distance, thanks to digitalization, we are closer than ever, and the future is already here. But first of all, let's see how the CE markets performed in 2020, because this is the starting point of my presentation, and then we can move forward. Now, because time is of the essence, of course, well, basically, as you all know, when we compare the EU with the CEE, we can see that there is a lot of potential in this region, and that the region actually stood up to the entire COVID-19 situation quite well. And of course, you all know this, there are some relevant specificities in the CE market. In example, life insurance, it takes up 31% of the entire market in CE in comparison with some 56% at EU level, so half. In addition to this, I should add that motor lines, they dominate the insurance portfolio with some 37% of all gross written premiums. Needless to say, financial education, this is a specificity of the CE market, is still work in progress. And needless to say, there is an important difference in the average income that people have in comparison with more developed economies. Plus, there are differences in terms of insurance penetration and density. As you can see from this chart, kindly taken from Extreme Insurance report. If we look at insurance density in this region, we see that it's almost 7 times lower in comparison with the European average. We stand at almost 312 euros in comparison with 2,000 euros per capita. In terms of insurance penetration, again, this is in the CE 3 times lower than at EU level, according to Insurance Europe. But we also see good signs, and we are happy to share that in my home market, because I represent the Romanian Insurance Association, UNSAR. We can see, according to our sociological studies, that as a result of the pandemics, we witnessed an increased interest in insurances. In example, health insurance, home insurance, and life insurance. Yeah, and again, these are our sociological studies. Hence, the potential I was referring to at the beginning of my presentation, the potential of getting more depth in the market. Another clear outcome of the COVID-19 situation is that it pushed digitalization and it pushed innovation. And this is a chart taken from IOPA's Consumer Trends Report, the 2020 report. If you look at financial innovation in 15 member states, the most visible innovation has been the increase in digital distribution and digital communication. Just to give you another example from my home market, in Romania, our studies showed that there is a huge potential for online tools. For example, 1 out of 5 Romanians, they used online tools to interact with an insurer, while 3 out of 5 Romanians use the same tools for other type of services. So it is for us to fill this gap. And I don't think the situation is different for other markets in the CE, because if you look at a very interesting report that IAIS published together with Klime at the beginning of this year, a digital distribution report, we can see that in the CE, digital distribution of insurance currently stands at 2%, in excess of 2%, 2.2%, while agents have 40% of the market share, brokers 20%, and bank insurance 20%. So again, the key message here is that it is for us to fill this gap. Now, let's go back a few steps. And this is a slide taken again from IOPA, from a different angle, from a more theoretical angle, if you like it to call it like this. You all know that digitalization already was fundamentally reshaping the insurance value chain before COVID-19. So I will not go into more details here because time is of the essence. Digitalization obviously means a lot of data and technologies that should and can work for us in the benefit of customers and help us increase insurance penetration. But ladies and gentlemen, the question here is it enough? As Catherine was mentioning yesterday during the very exciting first part of the conference, inclusive insurance, it needs a holistic approach, so that basically I can say that digitalization itself might not be enough. But let's go back a little bit in practice. Yeah, what's happening in practice? What happened in 2020 in times of COVID in the CEE? When we talk about digitalization during the pandemics, we basically refer to three main pillars: distribution, claims or loss assessment, and customer support. And if we look at distribution, we've seen in most of the countries the adaptation of traditional sales flows, so that physical interaction was minimal with customers due to the COVID-19, of course. We've also seen an increase in policies that have been sold through remote tools. And of course, we think this is valid for all of us. I think we've seen a simplification and digitization of the underwriting process. So the second pillar in terms of loss assessment. Also here, we've seen a simplification of processes. We've seen the automation of claims processes. And we've seen that customers got the possibility to notify claims by email or by different platforms, different apps, and so on and so forth. In terms of the third pillar, most important one, customer support, I think we've witnessed the fact that companies started to offer clients the possibility to make adjustments to policies in place online. And we've seen an increase in digital communication with clients. Not to mention that, and this is valid for more markets in the CE, and not only, I think we've seen changes at product level. I'm thinking about maybe increased limits for self-assessment of claims. I think we can refer to the extended reporting period for claims, which was offered to clients, or to extra coverages that are offered on policies that are already in place. Let me give you some other concrete examples of digital projects in the CE that most likely helped increase access to insurance. And I don't think that I can cover all of them, but I can highlight only a couple of them which appear to be more interesting. I mean, countries like Poland, yeah. Last year we saw, and this is public information, we saw the launch of a new platform that allowed consumers to buy household and travel health insurance policies online, to make an appointment with a doctor, but also invest their savings. Another interesting example might be Hungary, where the comparison of insurance premiums through online brokers, online comparison websites, this has become an established practice. And this actually, as far as I know, happened even before the COVID pandemics. So it was a trend already in the making. Czech Republic, yeah, we've seen the launch of a simple online insurance for people that covers the loss of income in case of disability and death. So again, a new product. In my home market in Romania, again, and I don't think I have time to cover all the examples that I have. So in Romania, we've seen the launch of video assessment of claims for motor and household insurance policies. In Slovakia, in the Czech Republic, we've seen an increase in cross-selling between industries. We've seen the development of digital platforms that belongs to banks, in example. So, ladies and gentlemen, the bottom line here is that indeed digitalization can bring a lot of opportunities. It can definitely enhance access to insurance, but this can probably happen, or most likely this can only happen when, as long as the regulatory framework remains open to innovation. And what I'm trying to say here is that, of course, regulation and supervision has to be activity-based to ensure that customers are equally protected at the end of the day. Now, as I've already said, for CE insurers, but I think for insurance everywhere, digitalization is clearly an opportunity. It can contribute, as it was discussed yesterday in the first part of the conference, so it can contribute to increase insurance penetration and to more resilient economies. But we need to take into consideration a couple of factors, and I'm referring here mostly to opportunities. First of all, CE markets are different, yeah, but digital tools can help, starting with the distribution process, but not only. Second, distribution can be an important advantage for emerging markets and for developing markets, because you don't have the legacy systems that maybe somewhere else are already in place. And last but not least, digitalization can be a source for the industry, for insurers to optimize and to consolidate their businesses. But regardless of these opportunities, again, I'm referring here especially to the CE, we shouldn't forget that we have some important challenges ahead. And I'm mostly referring here to the scale of these projects. We talk about digitalization, we talk about the use of mobile insurances, we talk about new distribution channels, but we need scale. And I think companies and investors and shareholders, they need scale in order to be able to come up with proper business cases for these solutions to work. And last but not least, I think digitalization can significantly improve the level of financial education in CE, thus increasing access to insurance. And for many insurers associations in the CE, and I think, if not, I think all of them, yeah, they invest quite a lot in financial education. And even for us here at UNSAR, the Romanian Insurance Association, financial education is one of our main strategic pillars, and everything that we have done in the last couple of years in terms of financial education campaigns, everything was done digital through social media, especially. So this is a major advantage of digitalization into increasing access to insurance. But again, needless to say, you all know this, financial education needs time, it needs resources in order to reach a certain goal. Just to sum it up, yeah, because I think I used up all my time. There are some key questions that I hope we are able to discuss later on. Key questions that arise regarding digitalization. First, what truly lies behind digitalization? I mean, there are mountains, there are valleys that we must cross before we reach the sea of digital. Second, we need, and this comes up as a conclusion in most reports, we need digital transformation actually needs a comprehensive approach. And the question is, how prepared are we at industry level to have this comprehensive approach? Third, do we really have the right products in place? Again, it was discussed yesterday in order to increase access to insurance. I mean, how many companies have fully digitalized distribution at the moment as we speak? And what products are we really talking about that can increase insurance uptake? Yeah, because again, it was discussed yesterday that we need a new generation of products. Fourth, is regulation truly digital friendly? And this can be a very long discussion. I mean, when we talk about Solvency II, about IDD, about MiFID, PRIPS, Motor Insurance Directive, GDPR, there are a lot of acronyms here, and there are a lot of costs involved too. So I think that supervisors and the public institutions, governments, they need to take action and to create the right environment in order to increase insurance inclusion, in order to be able to facilitate digital innovation, to the benefit of consumers. But the question is, how can we make progress on digitization without universal internet access, without the proper hardware, mobile phones, in example, smartphones, without proper tools, without having digital competencies, without financial education, and without proper regulation? So the bottom line is that from my point of view, yes, indeed, digitalization is here. It's definitely necessary, but it's not necessarily the universal cure when it comes to addressing the insurance protection gap. So basically, I think it is our role to find the right way forward, our role as the industry. Thank you, and I'm looking forward to fruitful discussions here. And again, congratulations from our side for a very interesting conferences. I don't think you see too many events focused on this topic nowadays. Thank you.
Thank you, Alexandru. Thank you for the very insightful presentation that you made, and also setting the scene in terms of what are the emerging trends in digitalization in the region, and of course, the key questions that are in front of the industry to consider. So taking this context forward, let me now ask Mr. Richard Lefley to come up and talk to us about how his organization, previously as Microinsure and now the Microinsurance company, which is a pioneer in use of technology and mobile phone-driven insurance solutions in emerging markets, has addressed some of the challenges that he has faced in different markets. So Richard, over to you.
Thanks very much, Manoj. I hope you can see my screen. Sorry. I'll do my best. I'm unfortunately just heard that I have COVID, so I have to try to get through the presentation, and then can try to answer any questions that you might have. So the Microinsurance company is a specialist reinsurance company which is focused on providing products and IT services for a range of companies, for insurers, for insurtechs, for digital players themselves who would like to serve the mass market. We've been working for the last 20 years, building on the foundation of Microinsure, which is a company that I founded. And we've served more than 60 million customers across Africa and Asia over the last 20 years. I think it's true that distribution is really the most critical component of microinsurance. Quite often people focus on many things like the products or the regulations, and I think all of those things are important, but by far the most important piece is the distribution in my experience. And I think the reason for this is because I think it's true that no one wakes up wanting to buy insurance. And certainly if you're from a low income or from the mass market, and perhaps you don't have enough money, then I think it's especially true that you don't wake up wanting to buy insurance. But I do think it's also true that people wake up really worrying about the risks that they and their family will face today. And I think it's true that this section of society, based on our experience, is concerned about mitigating the risk that they face. And they're willing to do that if they are offered a very simple product and a frictionless customer journey via a brand that they trust. And what we've seen is that digital platforms have a very large number of users. and that those users frequently use the platform, and frequency of use is very much around equated to trust. So the more you use your mobile phone, the more you book a taxi with Uber, the more you order food from a certain organization, the more you trust them, because when they say something will happen, it happens. And the final component, which is very important, is that they're able to handle payments. So these three components of having a large number of users that make frequent transactions, and that there's a kind of baked in way of handling payments, make digital distribution partnerships a real ideal way of distributing insurance to the mass market. And so some examples of these are mobile phone networks, mobile wallets, ride hailing. Increasingly, ride hailing is important, and e-commerce platforms. If we pick the mobile phone companies, then mobile phone companies have been used to distribute microinsurance since around 2008, 2009. So nearly more than a decade now of doing this. And there has been a real evolution of how mobile phone companies can be used to get insurance into the hands of millions of people. What we've seen is that the first stage, which started for us in about 2009, was a loyalty-based approach. So we did this in Africa, where a lot of mobile phone users are pay-as-you-go customers. So they pay small amounts of money on a regular basis to top up their phone and make phone calls. And there was a lot of competition and a lot of churn, or a lack of loyalty from the customers to the mobile phone companies. And so we used insurance as a way of addressing this issue with client churn, I'm sorry, I'm not feeling very well. So you know, we've seen a real evolution, I guess, and I would love to go through it, but I'm afraid my voice isn't going to allow me. So I'm just going to touch on this one slide, which I think is really important, which is how I think there are four ways. So when you look across the different digital platforms that are out there, we've seen these four ways that you can leverage the digital platform to distribute insurance. So the first way in the top left corner is that insurance can be used as a way of changing client behavior. So for example, in a mobile phone company, this could be that you want people to be more loyal, you want them to top up more, you want them to download an app, or you want them to make transactions. In a bank, it could be that you want people to maintain a certain balance in their bank account. In the top right corner, we can bundle insurance with other products. So a typical way of doing this would be, we've targeted, for example, migrants who have a mobile phone account. And what we found is that migrants want to have a bundle which includes data, which includes Netflix, so that they can use the data, they can watch films and TV shows on Netflix. But they also want insurance because they're worried about getting sick, losing their job. How would their family cope? And so putting together these kind of hard bundles and selling those as a hard bundle, where it's combined with services that people can enjoy today, as well as insurance which people can use tomorrow, is a very powerful way of signing up people through these digital channels. In the bottom left is standalone paid for insurance. This is by far the hardest way of doing these products. The biggest mistake people make in the digital era is to put a product on the shelf digitally and say, if I make this available on my website, or if I make this available in my app, that people will magically come and buy the insurance. It doesn't work like that.
Richard, I'm sorry to cut in. If you could just take us to the slide, and really, please don't overexert yourself. I understand that you're unwell, but if you could just take us also to the slide that you are referring to, because I think the presentation is still stuck on the introduction slide. We can say.
Okay. I don't know how to make that happen. No, I'm sorry. What I'm looking at is the slide in question. Can you see it?
All right. I can't. Is this slide number 5 that you're referring to?
Yeah.
Yeah, it's on here now.
Okay. So in the bottom left corner, the standalone paid for insurance is, it really doesn't work if you just put the product on the shelf. So you really have to convince the digital partner to use the data that they have to identify groups of clients. So for example, if there's a mobile wallet company and people are using their mobile wallet to pay the school fees, then you can send a message to people and say, hey, you just paid the school fees. Would you like to have a product where if something happens to you, your child finishes school? And so being able to use that kind of data to then target products to people is much more successful for selling standalone insurance than just putting a product on the shelf passively. And then the final model in the bottom right corner, especially in this emerging kind of gig economy, there's huge competition. For example, ride-hailing companies, competing with drivers, and so using insurance as part of the incentive for the drivers has been a very powerful way of getting insurance into the hands of many people. So hopefully this has been useful. I'm really sorry that perhaps it's not as engaging as I would normally be able to deliver, but I think if it's okay, I'm going to drop off the call and leave you guys to have a good discussion. Thank you very much.
Thank you, Richard. And we really appreciate you making time in spite of being so unwell. And we wish you a very speedy recovery. And we totally understand, of course, please take care of yourself. And thank you for your insights.
Thanks.
Definitely appreciate it.
Yeah, thanks.
Please take care. Thank you. All right. So, well, this is how it is. We have had certain changes, and we really hope that Richard would make a speedy recovery. And we still, and we are thankful still that he had the opportunity. He still took some time to share his thoughts. So, moving forward, we now. Once having listened from Alexandru thus far, and also the key points that Richard made in terms of how use of technology actually creates a degree of dependability and the mass and the scale that helps such insurance business models to be able to reach out to the excluded and underserved segments, and the various models in which such solutions can be used and put to practice, as we have seen in different markets. Taking this approach of how technology is leveraged in different models for inclusive insurance, we would now be listening from Pula. And Mr. Suresh Janardhan, who is the commercial director for Pula in Asia, would be taking us through his company's experience. Pula is an agricultural insurance and technology company that is designing and delivering innovative agricultural insurance solutions and digital products, and would be really interesting to listen to him to see how technology and digitalization is being leveraged here. Suresh, over to you.
Thank you, Manoj, and good morning, everybody. I'm sorry, it looks like a day where a lot of people are falling ill. Okay, so going through this, so I'll take you through about the journey of Pula and how we've leveraged technology in the insurance sector, and how in a short span of time Pula has achieved what some of the large agri insurance companies have not been able to achieve. And I just wanted to give you a background from a country that I come in from. So India happens to actually be one of the largest agri insurance markets. We do close to about $100 million every year for a single crop on an insurance called the Pradhan Mantri Fasal Bima Yojana, and we have tremendous uptake on it. It has close to 98% premium paid by the government, and rest 2% is paid by the farmer. But because there is no technology in that product, and there has been, because of lack of technology, I would say there are multiple states as we speak today. There are 5 states who have now voluntarily said that we want to move out of this product because we don't see technology being used. and we see a lot of challenges with the way the program is run currently. So I agree with Alex and also with Richard in saying that, you know, technology is key for success for any company, be it insurance or for any other field as well. So Pula has used the technology pretty well, and I'll take you through the slides. Can you go to the next slide, please? Yeah. So this is an important slide. So Pula actually uses a platform wherein we bring the customers and we actually also bring in reinsurance. So it's more like, you know, when I go and talk to a client, I say Pula is like the Uber of the transport. So we go to a customer, and what Pula brings on board is that, you know, we talk to a customer and say, okay, this is what we have as a product, but we are not an insurance company. So it's a unique selling concept. We say we're not an insurance company, but we sell insurance products. So based on that model, we have actually been able to basically insure about 5 million farmers in all of Africa for now. And we started our journey 1st of January into the Asian market. We've been able to do a sum insurance of about $750 million. We've paid, you know, we've collected premium of about $27 million, and we've paid close to 12.7 million as insurance money to the farmers that we've insured. What Pula does is that, you know, with the technology that we have and the product that we have, we've actually been able to enroll a lot of reinsurers with us. What we do on ground is being seen by the insurance companies. And agriculture, by the way, is not a very fancy subject for a lot of insurance companies because it's so complex to get into. And like how Alex said, you know, most not Alex, one of the speaker previously said that, you know, most farmers are very optimistic. They don't want to believe that they'll probably have a loss. So it's interesting that unless you have a good technology, you really can't sell to a farmer. So this is what we do on what we go and sell to a country saying that, you know, we are not selling insurance to you, or we're selling an insurance product to you. And again, regulatory is a key challenge in most of the countries. When we go to a country and say, you know, the first objective of a country is to say that, okay, are you registered as an insurance company in India? If you're in any country, if you're not a registered player, then you can't sell insurance in a country. So that becomes a key challenge for us. And then it becomes a little difficult for us to explain to them that we are not an insurance company, but we are a technology company. We bring a product which we sell through the existing insurance companies in a country. Going to the next slide, please. So in a span of 5 years, what Pula has achieved is that we've actually taken a substantial amount of market share from agri insurance companies in Latin America, in Africa, and we started our operations in Asia. And now we're trying to also get into the Central Asian markets, which is what I'm going to talk to you about, and what are the challenges in those markets. As investors and partners, we have Gates Foundation with us, we have MasterCard with us, and we have almost all the reinsurance companies with us because they believe in the technology that we deliver and the technology that we use to sell our insurance products. Next slide, please. And how do we get it done? So what Pula does is that, you know, as we know, most of the farmers, smallholder farmers, face a huge risk of drought. And so far, the product that they used to have is basically a product which was either the weather index or the MPCI product, which basically required that, you know, if there is any kind of a calamity, the insurance companies typically would have to they have to process claims for, you know, imagine a country if there are 1 million farmers. So you have to process every farmer of that 1 million farmer would have to give a claim form first. They have to go and the insurance company has to send a person on ground. They have to go and do the audit of each of these farms, and then come back and submit a report of saying that the claim has been processed. So it's a hugely, you know, difficult process to implement. In fact, yesterday we were having a call with the Thai regulator, and one of the reasons, and we were explaining to them that for this particular reason, it takes any insurance company about a year to disperse the insurance amount. So, you know, you might have a calamity for which you have to pay and for which the farmers have paid, but because the process is so intensive, if you really want to do a good job, then you need to really go down to each farm, assess the loss, come back, and then pay to them. So because of that, it becomes very important that we use technology to assess the loss and technology to make sure that we cut time and build confidence with the farmers. So that's what Pooler does. We actually bring in technology to assess the loss and also technology to pay the farmers what they need to be paid. We sell a product called the Area Yield Index. So, and that's also a key product. That's also, I would say, a technology-based product. Now, why I say it's technology, because, you know, for MPCI, it's very difficult on MPCI, it's very difficult to assess a loss. But what we do is that we actually pick up the entire zone as an area, and then we do and then we ensure a yield for that particular area. And that yield assessment is done through satellite imagery, and to basically augment that particular, you know, technology. We also do crop cut experiments on ground, and then we go ahead and finalize the yield, and the amount is paid to the farmers. So the entire process is cut down. It's highly technology driven. We also have insurers and reinsurers on a platform, you know, through which we sell these premiums and get premiums and get reinsurance premium from the insurers and all of that. So everything is done through these platforms, and that's how we sell this product. Next slide, please. Now, this is a process as to what we do. So what we do is that, you know, we don't go by the administrative boundaries in any country. So for an example, if you pick up a country, for example, if it has 50 districts, we basically cut down the districts into agroecological zones. Now, this is again done by satellite imagery. We go down, we check the soil content, we check the moisture content, we look at similarities in a particular area, and then we define that into an AZ. So in a particular district, you know, and those have been challenges in India also, a particular district may have a dry area, may have a wet area. So, you know, in our case, we basically cut down the districts also into AZ. So one particular district would have multiple AZs. And we do that pre-season, and then we go ahead and when the season starts, we also do something called the crop cut experiments. We go back and give them an estimated yield, and if the yield is lower, then the amount is paid through mobile phones, you know, into the farmers' accounts. And all this, you know, the data of the farmers is also collected pre-season. So all of that, you know, so in a typical MPCI product, it takes about a year to get the payments out, but in our case, we've been paying that in 3 to 5 weeks, in probably 3 to 5 weeks. Yes. Next slide, please. So this is an example of you know, how we've done a project in Nigeria and how we built the confidence with the customer. We started with a very low number of customers, and over, you know, in 2016, and as we speak in 2020, you can see the payouts have been large, the customers have been large, the women farmers have come out in large numbers to enroll with us. So that shows an example of how the trust has built over a period of time, and all of this has been happening with an inclusive, you know, growth. I would say we've actually gotten partners, the insurance partners also onto the scale. We got reinsurers also, and everybody's using the technology. I'll go on to the next slide and show you how we're using the technology. And this is how you can see that over a span of 5 years, we've grown the entire market substantially in Nigeria. We've done similar, if you look at in Kenya. Now, a large part of the Kenyan insurance market is also with us, which earlier was not. So technology plays a very critical role in achieving what we've achieved. Next slide, please. So this is how it works. So Pooler is on the side. Like I say, we are the Uber of the insurance platform. We bring in reinsurers with us. We talk to the insurance companies in the country. We also get the government agencies involved. And we also, in case of if there are any bankers or loans or any other, you know, people involved, we also talk to them. All of them come together. We basically agree on a premium. We basically come out with so the important part is, you know, I need to step back a little, is to know what are the past history of yields that we have. So, you know, yes, technology is important, and that's where we have some challenges in some countries when we go in, because for machine learning, for machine learning, we need to have a lot of historical data, but that particular data is not available in a lot of countries in Central Asia, whereas in Africa and Asia, that's not so much of a problem. So we basically put out all the yield data from historical data from the past onto our engine. We give them, you know, all the data from the satellite in terms of how the weather conditions are, how many droughts have been there in the past, and based on that we get the reinsurers to take a risk, we get the insurers to take a risk, and based on that we arrive on a premium. And it's a completely transparent process. We call it you know, in the next slide I'll show you, it's called PI. It's the Pula engine which we use to get all these players onto the same platform, so everybody is seeing what is happening. It's a transparent process of knowing what the premium has to be paid, and what the risks are. And this is exactly what we have done in Africa, and this is what we are taking into Asia. Now we've just been 6 months into Asia. We're already doing a pilot in Philippines, we are doing a pilot in Nepal, we're doing a pilot in Pakistan, and we discussed, and yesterday, like I said, we were in discussion with Thai government, and they're saying they'll build a pilot for us. So because it brings in technology and because it brings in transparency, there's a lot of uptake for this kind of a model. Next slide, please. Yeah, this is the Pula insurance engine, which I was mentioning. So this basically takes in all kinds of data on it, and which is visible to all our partners. So based on this, we have reinsurers, insurers, and the government is also, it has access to it. So it can see how the premiums arrived. And this is a transparent process of arriving at what the premiums are. So it's not that I'll say, okay, I had X yield last year and you're giving me a lower yield this year. So there's no chance of any kind of concealing of any data, and we're very transparent about this, and this is what has been a success story in terms of building a beautiful insurance platform. Next slide, please. Yeah, we also you know, use technology in mobile phones, and we hire enumerators on ground who go on ground and do the crop cut experiments on ground. And these crop cut experiments are also monitored on a real-time basis on a platform. So we know that, you know, we kind of keep a check, because what happens is that many a times, you know, you have people sitting at home and doing crop cut experiments. So we can actually track where the individual is, what kind of data is he filling up, and you know, what is good data, what is bad data. So it's happening at real-time basis, and all of the data is monitored by technology. Next slide, please. So, you know, Transcaucasia is the area that, you know, we were looking at in terms of the presentation. I think Rose was given a brief around that. So I'll talk about the challenges. I'm not too sure if the entire, but we looked at the challenges in Transcaucasia, not really in CCE, but CCE may be a little more, I would say, expanded area, and some areas would be better in terms of agri-insurance. But Transcaucasia has major challenges in insurance, and one of those challenges happens to be lack of data. Next slide, please. So if we look at Transcaucasia, the 3 countries that we looked at were Georgia, Armenia, and Azerbaijan. The key crops are all mentioned here. They're more or less similar crops as in Africa, but probably they have some expensive commercial crops. The major risks are hail, drought, floods, earthquake, frost, fire, land, and mudslides. And if you see an estimated, again, lack of data, we couldn't find more data, but what we got roughly is this, that in 2018, Georgia had about $5.7 billion as insurance premium. Armenia had about $24 million, and Azerbaijan had just $6 million. Again, one of the key challenges is that, you know, we were talking to a couple of countries, and some of the countries have actually moved away from agriculture insurance in the last 2 or 3 years. Uzbekistan is one such country that I was talking to, and the government said that we are not into agri insurance anymore. So I can see where the pain points are, because you know, and I completely believe that if we bring in the right technology, we could basically bring many of these marginal farmers back onto an insurance platform. Again, in these areas, the key crops that are corn, cotton, soybean, wheat, apricots, grapes, barley, and sugar beet. And we're doing insurance for, and what we bring in is also, as a product designing company, we also bring in, so if you look at it, many of the insurance companies do not do insurance for apples and peaches. And also, like, you know, we approached the Turkish government, and they said they want hazelnut to be covered. So since we are a technology company, and since we had data of hazelnut, so we could actually come in and design a product for hazelnut. So that's where technology plays a critical role. And that's what I think we need to do in many of the CCE countries as well. Next slide, please. So this is the data around the natural disasters. If you look at Armenia, one of the key issues is earthquake, and when we look at Azerbaijan, it's primarily flooding, and when we look at Georgia, it's landslides and earthquakes, which are the major risk. Next slide, please. So this is again more or less the data of these countries. In 2020, agriculture contributed to 7% of GDP in Georgia. Again, data which, yeah, next slide, please. I'll probably focus more on the challenges. Yeah. So if you look at from a technology point of view, one of the stuff that we really want to do is to get data, and I see that in CCE countries there's lack of data around agriculture. So unless you have great amount of data, the machine learning will take time, and that will be one of the challenge that we'll have to design a product. And there's low willingness to subscribe, because if you have lack of data, then the insurance premiums are high, and that results in a low willingness for the farmers to actually buy a high insurance premium. Government policies, like I said, I mean, we've been talking to a couple of countries, and the issue is that if you look at Turkey, it's highly regulated. If you look at Azerbaijan, the government says there is no insurance. There is no insurance that we do. There are no policies around it. And similarly, there are lack of qualified insurance players in the sector on the agriculture insurance side. I'm not saying about the house and personal insurance, but on agriculture insurance, it's difficult to find experts in this field. Next slide, please. Yeah, so the recommendation that we have for this particular area is use of technology. But having said that, we need a lot of data to have a machine learning and to also load all of that onto a Pi engine so that we get the right product and the right premium. Area yield index has been proven as an effective method because the multi-peril crop insurance also requires a lot of trained people to go and do crop cut experiments, also very labor intensive and high on cost. So AYI, the area yield index is a proven product, and that could be used. And farmers also get faster payouts, which is 5 to 7 weeks as compared to MPCI settlement. So that's the way forward. And we also basically in case of certain countries where they require some mix of MPCI and AYI, we're also willing to give hybrid products, and that's what we've been able to achieve in 17 countries in the span of 5 years. And AYI is actually the cheapest and the fastest implemented product that one can do in any country. So because you don't need to go down and do a large amount of survey, you don't need to get into understanding a lot about the farmer practices and all of that. So with a lot of with good satellite imagery which are available these days, one can actually enroll a country pretty quickly. The only issue being lack of data. Next slide, please. That's all that I have. If anyone has any questions, I'm sorry I was not well prepared. I was just given a 1 hour notice, so I hope I've done justice to this, Manoj.
No, thank you, Suresh, for a very insightful presentation and also sharing Poola's model and approach, and clearly understand and giving us a clear overview of how you're using technology to, of course, implement new models, and of course, addressing the challenges around distribution that you have, and of course, the need for data that you have, especially in promoting and developing better products. I know that there are questions coming up, but I'd like to hold on to them for a while so that we could look at them towards the second half of the session.
Sure.
We would definitely have the time. So thank you. So moving forward, and where we have seen that from when we have seen from 3 different practitioner and industry perspective on how technology is encouraging new models, technology is encouraging identifying and ways in which distribution is getting addressed better to reach out to the underserved segments, and of course how in different new ways data is being used to provide risk management solutions in the inclusive insurance space. So taking this industry perspective, there's another key part of this industry is also, or the sector is also the role of the regulators. And how do regulators, or can they encourage digitalization in a manner that is sustainable and responsible? And we would hear from Hannah Grant from E2I on this. So Hannah, over to you.
Thank you, Manoj, and good morning, good afternoon, everybody. I'm actually going to have to ask my colleagues at the Min to share my slides because for some reason I'm not getting the option now. It came up in the practice before, but when I go to the tabs now, it's not giving me my slides as an option. So I'm just, if colleagues at the Min can help me by putting my slides up onto the screen, that would be much appreciated. And maybe while they're doing that, I will just start off anyway. So I think, we've heard from previous speakers, how digitalization is bringing a lot of opportunities and to enhance access to insurance, and particularly inclusive insurance, so really get out to these more remote and probably more difficult to access consumers. However, we've also heard from the previous speakers that this only works if regulatory frameworks are actually open to innovation and open to digital insurance. So in my presentation now, I'm going to talk about how the A2I has been seeing insurance supervisors both, let's say, creating an enabling environment to enable digital insurance to be written, but also I think going a step further than that and actually taking steps to encourage and support sort of innovation in their jurisdiction. So the IIS insurance core principles are the globally accepted standard for all insurance supervisors. And those who actually listened to the session yesterday will have heard my colleague Teresa talk about how supervisors who want to encourage financial inclusion implement the insurance core principles in a proportionate manner. And this is no less true actually when we look at InsurTech. Here it is very important, and actually it enables players such as Pula, who was presenting just before, to actually come into the market and provide its services. By having sort of proportionality applied, it enables, as I say, different types of entities to come into the markets. It does this through sometimes lowering, in line with risk, but lowering barriers to entry. So sometimes slightly different licensing requirements, maybe even different capital requirements. And also by doing this, it actually encourages companies to come in. It encourages sort of innovation in the market, as it makes it more affordable for insurance companies to come in and provide services or provide products to more difficult to serve consumers. And some examples of this, and I have a few examples on my slide, but I'm actually going to take some examples from the report that the A2I published along with the Slovenian authority yesterday, of some examples from the region where we've seen proportionate regulation or approaches to regulation being taken. And we saw that actually 11 authorities actually in the region are allowing e-signatures. So that's a good example where standard regulatory requirements have been changed, in line with risk, to enable sort of digital models to be used. We also heard that 12 authorities are allowing use of remote means of doing business, and 6 are allowing sort of mobile insurance. And then 5 also said they have supportive legislation on digital models. So I think this is all very promising, but these numbers are out of 24 different authorities that responded. So I think when you put it in that context, it also says that there is quite a bit of work still to be done in the region in terms of building a more enabling environment for digital financial inclusion. And I think, regulators do face a challenge in doing this. Their primary mandate is consumer protection and financial stability. And increasingly, some supervisors also now have a mandate for market development. But these new digital innovations do create new risks, sort of cyber risks, data protection risks. And so while still trying to encourage innovation, supervisors need to strike what is actually a very difficult balance between enabling these new innovations to come into the market while still protecting consumers and making sure that the market is safe, that the products deliver when they're supposed to. And this is a very difficult balance that insurance supervisors need to face. And I think another sort of challenge I think supervisors see in this area is just the need to coordinate with a much wider set of regulations and also supervisors, as digital systems cut across multiple jurisdictions, you could say, even within a jurisdiction or regulatory jurisdictions. So they might cut across the banking and the payments area. You'll see some of the digital using digital maybe payment models within the insurance product. Therefore, there might be a need for the insurance supervisor to be liaising with the banking supervisor. I've already touched on sort of challenges around data protection. So in order to make sure consumers are protected, the supervisor might need to then liaise again with the data protection regulator. If business has been written via mobile channels, it might then require liaison with the telecommunications authority. And all of this is really important. And I think it is the role of the supervisor to really reach out to these other authorities to make sure that firms who are trying to innovate, who are trying to bring new products to the market, don't face duplicative requirements or sort of costs that make it sort of prohibitive to them coming forward and serving this market group. So it is a challenge, I think, for supervisors there, but I do feel in that they have a role to play in trying to sort of streamline the process, let's say, for new players coming to the market. And in terms of how we're seeing supervisors sort of dealing with in their jurisdiction, we are seeing them using a number of different tools to support and, say, encourage innovation. I think it sort of started off probably more with supervisors doing what we call a wait and see approach, where they would maybe just allow some innovations to happen in the market and then just react a bit later. But obviously this leaves quite a big risk, because depending on what the innovation is and whether a lot of consumers have got covered, if they're only reacting in some ways after the event, it does leave them in a high risk place. So I think increasingly we saw supervisors moving from that to actually taking more of a test and learn approach. And this is generally a bespoke approach where supervisors would be talking to either the distribution channel and the insurer, and talking to them as they're developing the new product, as they're figuring out the new distribution channel, and discussing with them as they're sort of going about trying it. Although at this point in time, there might not be any specific regulation sort of in place to govern the business being written, but the supervisor is working very closely with the firms who are, as I say, developing the products. And as they go along, they're sort of making maybe refinements to their general sort of regulatory approach. And this is sort of referred to as a test and learn approach. And then I think it's sort of a more sophisticated form of this, and we've seen sort of supervisors moving in this direction definitely in the last sort of 3 to 4 years, is actually, I'd say, formalizing the test and learn approach in the form of a sandbox. And a sandbox is sort of, say, a limited area, or covers a limited area over a limited time. And it enables firms to test, let's say, in a relatively safe environment, sort of different innovations, while having quite a good discussion with the supervisor at the same time. And we've seen many jurisdictions doing this. And I think actually in the survey, as I mentioned earlier, that we issued just recently, I think we saw that 5 supervisors in the CEET region have sandboxes in place. And we've also seen this in the UK, FCA, Spain, Netherlands, India, Malaysia, and actually many more have taken this approach. We also see supervisors starting innovation hubs. And this is, I mean, similar in some ways to a sandbox, but what you have here is a dedicated point of contact where firms can raise queries with and seek guidance from the regulator. So it's just a clear point of contact within the supervisory authority. And this is actually the approach that most sort of EU member states have taken. I think it's 21 sort of member states have taken this. And I think in both cases of these sort of types of approaches by supervisors, it's a good signal to the market that this market is open to innovation. The supervisor is encouraging the industry to come forward with innovations, and they both provide the industry with a clear sort of step forward of how to move, how to progress. And often they might result in maybe changes to regulation supervision sort of at a later stage along the way. And actually the A2I itself actually also runs what we call an innovation lab, where we work closely with insurance supervisory authorities. We actually heard a little bit about this from the Albanian supervisor yesterday. But here we work with the supervisor in bringing together a multi-stakeholder sort of country team who do work together at looking at what the barriers are to innovation in a jurisdiction, and then either developing new products, changes in regulation, and things needed to overcome the barriers. So I think it's just bringing together the right stakeholders, which is a really key part of this. So digitalization doesn't just help to improve the products and improve the distribution of them. It's also making big differences actually in the internal processes of how reporting of business is done. And here, RegTech and SubTech are the main sort of categories referred to. So RegTech is a subset of FinTech that focus on technologies that may facilitate the delivery of regulatory requirements more effectively and efficiently than existing capabilities. So this is really looking at the insurers and how they go about reporting on their data to the supervisor. And SubTech is actually how the supervisor itself is using the data. and about really largely on the market conduct side, how they're actually collecting in data and using it to improve the way they go about doing their market conduct supervision. And actually a nice example here is how supervisors are starting in some cases to maybe use social media reports. And I think this is very relevant, particularly for low-income consumers who maybe aren't so familiar with formal complaint channels. If supervisors are using subtech, they might be able to, through social media channels, pick up people complaining about how products are not working as they expected, and other forms like this, which I think helps to improve the supervisor's oversight of the market. So it's just another, I guess, example of how technology is transforming the insurance business place. And I think also through supervisors and the industry using these technologies, it's making it easier for supervisors to supervise some of the new innovations that are coming forward. So just to conclude actually my presentation, I think the role of the regulators, I mean, the primary role does remain to ensure fair, safe and stable sort of insurance markets, sort of consumer protection, financial stability. However, I think innovation is increasingly recognized as an important part of an insurance supervisor's role. And I mean, particularly when it comes to fintech, I think regulators do have the task of being quite dynamic, yet proportionate when designing the regulatory framework to enable and facilitate sort of changes in the future and to encourage sort of innovation within their marketplaces. And as I just touched on in my last slide, I think the emerging technologies that are helping sort of regulation and supervisory efforts are actually helping supervisors sort of striking this difficult balance. So with that, I sort of conclude my presentation and just look forward to taking part in the discussion.
Thank you so much, Hannah. And thank you again to all the panelists who have presented their views here. And this gives us an opportunity, to look and review like the whole picture that was presented from different perspectives, both from the industry side and how regulators are also looking at encouraging innovation and at the same time making sure they do their traditional roles as efficiently as possible as well. So looking at the questions that we are getting from the audience, one of the first questions that came in, and this was essentially when Alexandru was talking, he talked about, does digitalization require rethinking and redesign of traditional insurance products? Or to put it another, if I could paraphrase the question, is does digitalization require different kind of products to be designed rather than the way traditional insurance products have been designed? Alexandru, would you like to have the first shot at this question?
Yeah, thank you for that. And Desislav, I think this is a great question. I tried to answer it via the chat, and in my presentation, yes, indeed, I think digitalization needs a 360 view, a comprehensive approach, and probably part of this comprehensive approach, we need a new generation of products built on top of the very same principles of insurance, but probably we need a new generation of products. And I think we can already see this happening. I gave some examples in Central and Eastern Europe, but I'm pretty sure that people in the audience have much more examples of new products that appear in Central and Eastern Europe, plus the international examples that you all know. I mean, starting with parametric insurance, with embedded insurance, and so on and so forth. Yeah, thanks.
Oh, thanks, Alex. In fact, I'll take the same question to Suresh as well. Now, given that they primarily are a fintech, or sorry, fintech rather than an insurtech company. So, how do you look at traditional products, and what does it mean when you are offering an insurance product digitally or a digitized insurance product? You're on mute, Suresh. If you could unmute yourself.
Sorry. Yeah. So yes, it will take some time to transform the entire platform into a digital platform. So going forward, we will probably, which is why I did touch upon a hybrid kind of a product. So there are countries who are looking at hybrid products, wanting to experiment with new technology products in some areas, and then continuing with the existing conventional products at some point in time. So yes, there are new companies coming with new products, like we are also experimenting some markets, but Hannah also is aware that regulatory is again a key issue that also obstructs a lot of technology based products that are coming in. We are finding a lot of challenge in the Asian markets. The African markets are not so webbed with regulatory environment, but the Asian markets are very difficult to operate. So when you come in with a new product which is technology based, you have to explain first the regulator, then you need to start education at all levels. That's a challenge with the tech product. Yeah.
Kenan, just to comment on what Suresh was referring to.
Sorry, to me, or I couldn't hear you say.
Yeah, I was just saying that, he just referred to how like the role of regulators in terms of encouraging insurance product in the digital setup.
He did, and I was actually keen to go back to Suresh in a sec to get a little bit more information on exactly, where regulators are raising concerns of the products, or whether it's actually Poola's role in the distribution to sort of better understand it. Because I think it's very context specific often.
Yeah, so the issue is that we keep telling the regulators that we're not really an insurance company. We're not selling insurance. We are basically selling a product which is plug and play with the existing insurance companies in the country. But they're not able to understand that particular part. And we say we also bring in additional reinsurance capacity with us because people understand our product. But the regulators are not very sure whether to call us an insurance company or call us a tech company. So it was, it has taken us 6 months to explain to the Thai regulator that we are not really an insurance company. We are only selling a product and we'll sell it through a Thai insurance company. So yesterday, finally, they agreed and said, okay, yeah, you don't require a regulatory clearance. But yeah, it's taken us 6 months. So that's why I said, in India, we're still struggling. They're not giving us a license, and they say if you're selling a product, then you can only take X amount of margin for that. For a product design, you can charge X amount of fee, but our fee goes beyond that because we are also designing a product. We're also implementing the entire product. So there are issues in terms of how much we could be paid for a technology product. So yeah, the challenges are different in different geographies. Like I said, where there is in Africa, it was much easier because the company got founded there. The regulatory was not so strong, but we see challenges in terms of countries now insisting that you need to have an office in a country that you're operating. So that also, I would say, is a regulatory requirement. Like in Indonesia, we are seeing that. We're seeing that in Malawi, where they're saying, okay, you need to have an office if you're charging any percentage of the premium also. So these are some of the challenges that I can highlight for now.
Sure. Thank you. In fact, Poola, sorry, Hannah, were you going to say something?
No, I was just going to comment that it's very interesting to hear the specific examples, and they're definitely things we've heard before. I think it is often a big challenge, and it is different in each country, which is why it's interesting also to hear the specific sort of examples where in particular countries you've now had to form yourself into, you've got a different type of license. So you're saying in Thailand now it's actually not required, whereas in other countries you might actually have to get yourself some form of brokerage or agent license, despite the fact that you're not a distribution channel, or in other countries maybe even an underwriting license. And I think this is, it is a challenge, but supervisors, I hope and I feel, are increasingly wanting to support innovation. So I hope that through the sandboxes and things that they're putting out, that this is actually, and having these innovation hubs where you have a person to contact in the authority in the first place, I hope this is making a difference. And I feel it is, because we are seeing sort of innovations in other markets coming out of some of these sandboxes that at least gives you a contact point, let's say, in the supervisor in the first place. And I think once you have that, you can then have the discussion. And then you can understand, supervisors aren't necessarily doing this because they want to be bad people. They want to make sure that the insurance market grows in a way where the consumers are protected. So I think where they have the opportunity to have a discussion, with yourselves, they can then discuss their sort of concerns, and then hopefully, you can together either come up with solutions, maybe slight changes to your business model, and ensure that, new products can be introduced.
Indeed, it's a matter of time. Like I'm seeing a comment coming in the discussion also is the fact that Poola is the next in line from what Bima Microinsure have been doing in African markets, and the regulators have started to appreciate what they are doing, and hence the understanding is better, and maybe we are in the process of getting there. In fact, Poola, there are two questions directed at Poola, and I would put them directly to you, Suresh. Here is that one is, how are you tackling basis risk, which are present with area yield insurance products? Yeah. And associated with that, and maybe you'd like to take both at the same time, is that extensive crop cutting experiments are cost a lot of money. They add a cost component to it. Is there, what are the ways in which you are addressing the cost associated with it, or it is just something, or is there a technology that you're using? Yeah, so please go ahead.
Excellent question. Actually, this is something that we are currently working on. So I'll take the second question first. So the crop cut experiments are really one of the key challenges that I see. And as I speak, I was giving the example of India. We have one of the largest AYI program going around the world, and crop cut experiment is one of the key challenges for the government of India as well. So what we are trying to do is we're trying to make a model where we're trying to, with remote sensing, we're trying to pick up imagery on areas where, and again, like I said, historical data is important. So when we look at historical data and we do a comparison from the remote sensing, we say, okay, we pick up areas where crop cut experiments might be required. So we do something called an exclusion method. So based on this, on the remote sensing modeling, we look at, okay, this area looks better, that area looks bad. So, based on that, we pick areas and do crop cut experiments. So this, as we speak, is still on an exploratory stage. We are still working on it. We've had a couple of people who have a lot of experience on this model, and we're trying to make that model work. So we'll probably soon come up with technology on crop cut experiment. But again, with area yield index also, I would say that we somebody asked a percentage. So we spend anywhere between 10 to 15% of the premium towards crop cut experiment. And in area yield index, you don't need to do the entire crop cut experiment. So we basically pick up some percentage of the total area, and we have a modeling around that. And in one of the Nigeria slides, I said we did crop cut experiments for about 5 lakh hectares with 5,000 people. So again, we pick up areas and we see what areas do we need to do crop cut experiments, and we do that. Now, for the question of the basic risk, what we do is when we're doing the insurance, we actually go to the insurer and ask him, would you want a basic risk fund to be established? So we basically park aside 10 to 20% of the premium towards basic risk. And then if there are any discrepancy on the payouts, and if a particular person needs to be, a particular area has had some kind of excess which is not covered by AYI, then we pick up that fund and use that fund. So far, so good. We haven't had much of an issue with that as yet.
Well, that sounds good, and very interesting to know that you're also using technology to identify what is the most effective way of doing your cross-cutting experiments. Hopefully, you will have more information going forward from what Pula experiences. Taking forward some of the questions again, and in fact, as the questions come in, there is one question that I saw on the slides that Alex had essentially, was about what truly lies behind digitalization, especially in the context that we are talking about, inclusive insurance, reaching out to the increasing penetration of insurance in the CET context right now. So if I could just get from the panelists one after, is the fact that what essentially lies behind the heart of digitalization, because CET as a region is definitely a very unique place in the sense that the availability of infrastructure that you may have, the kind of skills and the capacities that might exist in the region, and from that perspective. So the industry here, when it looks at digitalization as a force, what essentially just lies behind the effort towards digitalization that they would like to make? And maybe I can get back to you, Alex, on this. I know you posed the question on your slide, but what are your emergent thoughts on that?
I wish I had the answer, but no. On a more serious note, I think it's fair to say that it's a question of attitude and mentality first and foremost. And then I think it's also fair to say that it's one of the most important actions that shareholders can take in order to boost innovation to the benefit of customers. So it's not the future, is the present, and I think we all need to adjust. And again, going back to my point, we need the right environment, the right regulatory environment. And with this occasion, I would like to salute the fact that so many regulators within CE and beyond, but especially in CE, have set up their own innovation hub, fintech hubs, insurtech hubs, regulatory sandboxes. I mean, we are proud to say that in Romania, our regulator, the Authority for Financial Supervision, started, I think 3 years, if not 4 years ago, but 3 years ago, they started their own insurtech hub, which developed into a fintech hub. We are part of it. We meet there together, not only with the regulator, but with a number of key stakeholders IT companies and so on and so forth. So it's good to have the dialogue going at market level. And as far as I heard, other CE markets are going in the same direction. Also, I think that it's worth saying that a number of insurers associations, OneStar has been doing this for 1 year now, have developed their own digitalization and innovation working groups. So the dialogue continues at industry level too. And I think consumers are interested in this, especially since the COVID-19 pandemics really pushed the industry to go in that direction. And it's fair to say, and this is my last comment, that it's key that the industry was prepared for this. This was already in the making, because we've seen it in my home market. We've seen it in 2 weeks' time. All the industry was working remotely, and everything was running smoothly. Yeah. So this means that companies were prepared for this. Yeah. A long answer, but I think it's still an open question.
So the COVID provided impetus for them to start implementing the capacities that they already possessed. Maybe did not know about it, but they go ahead and did it. So taking this context forward to you, Suresh, in terms of looking at what lies behind digitalization as an insurtech, how do you see that proposition?
Well, I would say one of the bases of setting up the company, Rose and Thomas, we were discussing, was that we wanted to create a company which is technology driven, and that was actually the shortfall that we saw in the insurance field. So technology was always the key, and as we speak, we are constantly looking at building and scaling up technology, because that's the way forward. That's the only way forward for us. Because when you look at in fact, as you come from India. In fact, we've been called by the Indian government to say, would you want to do a pilot in India? And I say, no, we don't want to do a pilot in India, because we're not ready to do a pilot in India. The scale is so big, and the technology requirement is humongous. If you have to do a crop cut experiment in a state, it's actually next to impossible, right? I mean, so we have to. Today morning I was discussing that how do we do large scale remote sensing, how can we do drone based data studies, and how can we do extremely close studies to the ground to get the actual area yield index, and then based on that one can go to the government and say, yes, we want to do a pilot. But to experiment that, I would say I would say that we are in the right space, because one could experiment those technologies in Africa and then come back to India, which was the largest market. So that's been a good point for us. I mean, and as we speak today, we are going into Philippines to do a pilot project. Again, Philippines has large risks in terms of typhoons hitting them every year. And not very many insurance companies wanting to insure. So again, we're trying to use as much technology as possible to get PCIC, one of the largest insurance, the government insurer there, to get on board. So yes, technology is the key, and I think that's the only way forward for if you really want to make a difference, because otherwise there are many insurance players who have been playing in the field, and they would stay at where they are, and we happen to see how technologies has got us to where we are in the last 5 years.
So I hear from you is that essentially technology goes on and fills the space where the opportunity exists, and where the current solutions are not being efficient enough. Something what Alex was also referring to, in the sense that the capacities have already been there, but the cause gives you the impetus to start implementing more towards addressing the challenges that you face in the industry. Hannah, in this context, of course, putting the same question to you, what lies truly at the heart behind digitalization, and of course asking you to also bring in the regulators and supervisors perspective of this as well. Muted.
Apologies. I'd say the fact that really sticks in my mind is the one that actually Alexandri mentioned in his presentation, and actually came also from the report we just did recently, that only 2% of business distributed in the CEET region is done sort of online or email. And the rest, I mean, majority is sort of broker and agent still. And I think if you're trying to drive towards digitalization, I think I would expect a lot more to be done sort of, let's say, seamlessly through online platforms. So it just shows to me there's a lot of potential, let's say, maybe to grow business, I mean, more digitally than it is now. And then I also see, looking at the survey results, that there is a need for improvements in the regulatory environment to make it more enabling. So out of the 24 countries that took part in the survey, I mean, only 11 currently are allowing sort of e-signatures. A similar number are allowing sort of remote means of business. Only 6 are allowing mobile insurance. So I feel there's, yeah, the market hasn't reached its full potential yet. I think there's a need for change, one on the supervisory side, regulatory side, to probably make it a little bit more enabling. But then also we need to see the innovations coming from the industry to help take advantage, let's say, if the regulatory changes happen, but to also help drive the market forward. So I just see, I mean, in some ways, let's put it in a positive way. I think a lot of potential for the region for digitalization to have a big impact, because it's not currently as used as it maybe could be.
Great. Yeah, in fact, that's the perfect note to start to coming towards the end of the session today, is that, you know, potential and the opportunities that exist. Through the presentations that we heard from our panelists, we have come to know that, or come to see that, you know, even within the region, the industry has started looking towards technology, and the current pandemic offered it a real incentive and a push to start looking at those innovations that are that it already had the capacity to, but was perhaps not being made to look at. But once they started implementing it, it has had a positive impact on the markets, as Alex was referring to. While at the same time, as Hannah mentioned, there's still just 2% of all distribution happens online in a region where, you know, access to smartphones, internet access is practically universal. And we are also looking at that technology, and Richard's brief intervention also mentioned that you know, technology is there and it is trying to solve the biggest puzzle when it comes to innovation. Reaching out to inclusive insurance customers is that of distribution. And the idea is to identify ways and models in which technology can be leveraged to service low-income segments, or excluded segments rather, in a cost-effective manner at scale. And taking this idea forward, we have heard from also an innovative entity like Pula, which is implementing technology-driven solutions to reinvent and disrupt offering of agriculture insurance to smallholder farmers, and, you know, getting those learnings and getting into more bigger markets and more complicated markets as well going forward. But still, you know, the principles remain the same, where technology is practically trying to solve either the blind spots that currently exist, or offering us ways in which we can do things better and be more inclusive. I think this offers us a great note to bring this session to a close. I would like to thank all our panelists again, Alexandru, Suresh, Hannah, for your time. Also, a special thanks to Richard, though he had to drop in between, but still he came in and gave us his high-level insights, and we hope that he makes a speedy recovery. And with that, I'll bring this session on digitalization to an end. Thank you very much again, and thank you to the audiences for listening and sending in our questions. As we end the session now, we'll be moving on to a virtual coffee break, and then we would be coming back for our 4th session on creating value, changing lives, and customer focus at 11. So thank you again for your time, and see you in the next session, and also over the virtual coffee break. Thank you.
Thank you. Take care.
Okay, so thanks a lot. Very inspiring presentation and lively discussion. Digitalization is the most important driven factor for the inclusive insurance development. Manuel, thank you very much for the great moderation of the session, and please accept my apologies for making a mistake in the opening part.
Oh, not at all.
A great job.
Thank
As
you.
said, now it's time for the break and digital coffee, and I'm inviting you to come back at 11 for the last session of the conference. See you in short.